For years, Bitcoin has been seen as the king of crypto, the first digital asset to break into the mainstream. Some even call it digital gold. But a growing question is now on the table. If Bitcoin starts losing value and relevance, would governments continue to hold it, or would they rotate into utility-based assets like XRP? To answer that, we need to look at how governments actually think about reserves. Central banks don't trade like retail investors. They aren't chasing pumps or dumping bags on dips. Their role is to manage long-term stability. This is why gold remains in vaults around the world, even though it's not used as money anymore. Gold isn't about growth. It's about trust, diversification, and a hedge against currency failure. Bitcoin has started to fit that same narrative. Institutions and even some governments treat it as a non-sovereign hedge asset. So if Bitcoin declines in value, governments might still keep a portion, the same way they hold gold through ups and downs. But here's the key difference. Gold has industrial use, and it's universally accepted across borders. Bitcoin has no underlying utility beyond being held. It doesn't power payments, settlement, or tokenized systems. If its price weakens and its dominance fades, governments could easily justify reducing their exposure. After all, what is the point of holding large reserves in an asset that doesn't tie into the financial infrastructure being built? That's where XRP enters the conversation. XRP was designed for utility, not just speculation. It settles transactions in 3 to 5 seconds at a fraction of a cent. It's compliant with ISO 2022, the global standard banks are adopting for payments. It supports tokenization of assets, CBDCs, and stablecoins. These are the building blocks of the future financial system. If governments are going to rotate into digital assets, they're far more likely to favor tokens that directly plug into the plumbing of finance. XRP, Stellar, XDC, HBAR, these are built for rails. So what would a rotation look like? Governments wouldn't dump Bitcoin overnight. They'd scale down gradually, trimming allocations as adoption weakens and utility-driven assets take over. Bitcoin would likely remain a niche reserve asset, similar to how silver is still held but no longer defines global finance. XRP, on the other hand, would see increased integration, especially if CBDCs launch and tokenized markets explode. Governments would want to hold an asset that isn't just symbolic but functional. There's also the issue of energy and ESG. Bitcoin's proof-of-work mining consumes massive power, often criticized as unsustainable. As governments push for greener policies, holding too much Bitcoin could become politically costly. XRP, with its near-zero energy footprint, fits cleaner into the sustainability narrative. That matters when central banks are under public scrutiny. Of course, nothing is guaranteed. Bitcoin still has brand power and first-mover advantage. Some argue it will always hold a place as the digital gold standard, but history shows that technologies get replaced. The first doesn't always stay the leader. MySpace gave way to Facebook. Nokia gave way to Apple. If Bitcoin is the MySpace of crypto, then XRP may be the platform that carries the world into the next phase of finance. The bottom line is this: governments don't panic sell, but they do adapt. If Bitcoin begins losing value, expect them to maintain smaller holdings as a hedge, while rotating more capital and focus toward utility-based cryptos that align with the new digital financial system. Bitcoin may remain the symbol, but XRP could become the system. Please like and subscribe to LTL Productions. It helps more than you know. This is not financial advice.